Hey, good morning. Let's go over today's trade plan. So in the overnight session so far, ES has been very balanced. On the upside, we had resistance at 44.5 to 46.5, and for the most part, that zone ended up capping the upside yesterday, as well as in the overnight session. And at this point, heading into the open, we have primary support at 32 to 34.5, and that zone can also be used as the short-term bull-bear zone. So if we break below 32 to 34.5, then that would indicate short-term weakness and bring the 27 to 29 and potentially 22 to 24 support into play. Now the 27 to 29 is a spot where if we're seeing a lot of weakness on the internals and the other markets, then that's a zone that we can skip. So 27 to 29 is an area that really only makes sense if there is not just a lot of broad market weakness present in the market. Then 27 to 29 is a zone that can result in a reaction and a move back up into the overnight range. But if there is broad market weakness, wide range bars to the downside, break below 32 to 34.5 on some strong volume and momentum, then you'll want to skip 27 to 29 because ES is most likely going to go down to 22 to 24 at that point, and that's going to be a better spot for buyers to step in. On the upside, if we continue balancing here and then take out 43 to 45.5, that would bring the 52.75 to 54.75 initial resistance zone into play, and that's an area where responsive sellers can still be active on first test, and the market can balance yet again. Beyond that, 60 to 62.5 is a major resistance zone. It's the area where ES failed about a week or so ago and started, putting a big downside move. So, that's a spot that can certainly cap the upside in the event of an upside breakout and continuation. Now, if we look at the weekly econ calendar, we can see that the next major catalyst is really the jobs report on Friday. So heading into the jobs report, the employment report, it's probably just going to be more of a balance type market, right? So that's another reason that it makes sense to be a bit careful on even entering long at too high of a price or too aggressive a price, unless there's a specific setup on the smaller time frames. For example, if the market has balanced all night and then it starts putting in an upside breakout, that would be a still a long setup we can take. But we don't simply want to buy at a very high price, let's say near pre-market resistance, if there aren't really any major signs of strength, right? So right now this is a market that can technically just kind of balance in a range, right? Because the main breakout was above the 16 to 19 area, and so yesterday we got that upside break, and today is essentially a test of that breakout to see whether that strength is going to continue. So that's the context we're currently trading in. 32 to 34.5 is really the primary support. If we hold it, we can balance, continue higher. If we break below it, then we could be setting up for a move down to 22 to 24. In the event of strong momentum and strong selling, potentially even 16 to 19. Although, given yesterday's upside move, that seems unlikely. Most likely, buyers will be active on any kind of pullback to 22 to 24 and possibly even 27 to 29 if there's no major broad market weakness on the internals and the other markets aren't completely failing as well. So for now, the focus is still going to be more on the long side, especially above 32 to 34.5. As long as that zone holds, the buyers can maintain control. And then on the upside, 42 to 45.5 is still active resistance, but it's been tested a couple of times. So if we go up there on some decent momentum and strong internals, then we could be setting up for yet another break and a move up to 2050 and 52.75 to 54.75. So those are the main ideas on the day. Let's see how well the buyers hold it up at initial support. That'll provide the bias, at least a short-term bias, and we'll take it from there.